Good morning, good morning. How's everyone doing? How are you all? Good to see you guys. And apologies, it's been a couple of weeks. But yeah, good to be back on it. Can you guys just let me know if you can see and hear me okay? Then we can crack on. If anyone's here, just let me know in the chat, please. What's up, ZD? Can you hear me okay? King? Everything all right? Sound okay? You can't see me, can you? One sec. Yeah, now you should be able to see me. Perfect sound. Beautiful. Thanks, Dominique. All right. So, been a minute, guys. Been a minute. Let's crack on. We'll start with the top-down BTC, and then we'll move over to ETH and the ALTS and do a holistic market scan. All of the good stuff, as always. Okay. So, monthly picture. Right. Well, obviously, we've seen a severe drop so far since last looking at the monthly. This is off the back of this monthly divergence here on the RSI. Okay. So higher highs on BTC, on price, lower highs on the RSI. No double confirmation on the Awesome Oscillator. Okay, so no confirmation here, which is why I wasn't really positioning into the short side. I was being cognizant of the RSI picture, but wasn't actioning it, okay? Typically, we want to see double confirmation across both for a stronger signal that we can move into. But you can see here, we had a sweep of the highs on the monthly RSI divergence, seemingly locked in so far, and the play out so far, okay? Okay, so good evening, Jervin. How you doing? Okay, so weekly we are into this cluster of demand here, origin demand on the weekly. Okay, why is this a cluster of demand? Because we have a sharp move, we have price bracketing, and then a sharp move away. Okay, so this could be seen as demand. It could also be seen as a MSDZ, otherwise known as a market structure defense zone. Essentially on the weekly here, this is where we want bulls to step in to defend market structure. Okay, what do I mean by that? The high, the low, the higher high, the higher low, the higher high, the higher low, perhaps the higher high. Okay, so this would be the high time frame market structure argument and bull case. Okay, ultimately we really want to see this zone hold either way. Okay, bulls want to see this zone hold either way, and at very worst come down to take out the 74,508s here, like so. Okay, but then it takes the market structure argument off the table. Three days, an interesting picture. Okay, 3 days, an interesting picture. Reason being because we're still into that cluster, right? That weekly demand zone here, as you can see, but potentially forming a 3-day divergence here, okay? Like so, right? If we put something like this in, you can see the awesome oscillator is already starting to curl up here, okay? And then price dips back into this zone again one more time, something like this. This is a scenario I have my eyes on keenly, okay? So we have the RSI making a high-low, awesome oscillator, high-low, price making a lower low perhaps, back into that demand cluster on the 3-day and weekly, and then potentially a move away from here, right? This would be a bullish scenario, which I'm not predicting, right? I'm not in the business of rubbing the crystal ball. I'm just saying we have the beginnings of a 3-day divergence forming here, and it's something that I have my eye on potentially, okay? Just clean this up. The daily kind of supports that logic somewhat, okay? Reason being is because, as you can see here, we've taken out and swept local highs. All right, so we have a sweep here of this high here. And as confluence, we have the daily RSI just knocking up against the midpoint here, okay? So knocking up against the mid. What this means typically is that it's a key level of resistance, okay? So until we reclaim here, like so, it's still key resistance, okay? So we could see failure here from the mid, which then makes price sort of bend and curl down, like so. And if something like this were to occur, that would be your 3-day divergence locking in there, okay? And then you're simply looking for the 3-day green candle to form here. Okay, say something like this. And that would be the bullish trigger to the upside, okay? Yeah, 12-hour, not much really going on here. Still kicking myself about this position. I was short, as you guys know, on the triple drive up here, exited out of scales here. All right, so scaled bids took me out of the position here. And yeah, could have milked a lot more out of that move, but c'est la vie, as it goes, you know. On to the next, and it was still a lovely trade at the time. Okay, it was still a nice trade, just looking at it here. Wish I'd done maybe scaled bids 50% and then the remainder down here into the weekly demand. Anyway, one for the journal. Okay, so 4-hour, nothing particularly noteworthy. This has been, yeah, chop central really here. Okay, we've just been chopping around for, I mean, realistically, since down here, 22 days. Okay, not much trade opportunity in this region. Okay, we're just consolidating, potentially curling as we form that 3-day divergence here, like so. And if we are, then there's still not going to be much trade opportunity, and we shouldn't be sort of, you know, grinding ourselves down to the bones on the lower time frames. Okay, it's yeah, this is basically a no trade zone for me. Okay, there just simply isn't enough volatility or value here to be operating in. If I were you guys, I would sort of adopt the same process if you are swing traders and just lean into this as the 3-day picture. Okay, ultimately this is where the juicy value will be. Okay, you know, if we do get that diverging formation here on price, let's say it locks in here, like so, confirmation candle, divergence, like so. You can take a 3-day trade. There's nothing wrong with taking a 3-day trade. Some people think that, you know, just because we're charting the higher time frames, we can't take a trade on the higher time frames because it's going to take too long to play out. The risk to reward won't be high enough, and that's just complete bollocks, to be honest. Yeah, you can still take a 3-day installment, and to be honest, I advocate moving towards the higher time frames because the higher time frames have higher validity, and you can place your stop down here, down at the lows at the 74.5s, targeting up here for 3.26. If you were to do something like this, a 3.3, obviously, you know, given the confirmation candle looks somewhat like this. If not, take it higher, right? Look for a 4+R, or alternatively move into it, but then give yourself higher probability on the trade and cater for a shallow sweep of the lows as well, okay? And if you're targeting up here, then you're still looking at, you know, thereabouts a 3R trade. So yeah, nothing wrong with that at all. We tightened it up a little bit here. You can see it moves over to a 3R, something like that, okay? It's a very reasonable position to be looking at and anticipating. Appreciate it, Blabs. Good to have you here. Okay, so BTC we've taken a good look at, right? ETH. Let's just strip this back and do a top down from the beginning. Okay. So monthly here. Interesting picture on the monthly. Okay, as we know, we took out the highs up here. Right. Did so back in August. Swept the highs. Excuse me, I'm a bit under the weather. Did so with speed, right? And I was urging major caution in this area. Major caution. So we've, you know, sharp move like this, fast moves plus sweeps are almost always reversals. Okay, that's a piece of technical analysis you can have pretty high confidence in. Okay, if you've got a sharp move taking out a key high or low, especially as key as this, it's always likely to reverse. Okay, so that's what we had. Now we move down. Okay, and now we have price at a very interesting position. Okay, coming down to retest the midpoint here. You can see what happened last time. Okay, over here, right, we had this move away, this bounce and move away as the 50 level held. And to be honest, the monthly RSI has been pretty pivotal throughout. Okay, so we held above the 50 level, right, from this point here, That's where we moved past the 50 level and overcame it, right? It was capping us to the downside in this whole region here. When I'm talking about the 50 level, I'm talking about the 50 level on the RSI, okay, the midpoint. Then price reclaims that 50 level, moves up, does so venomously, okay? And we hold above the 50 level until this point here. Here, give or take. And you can see that, you know, above, you know, this whole time, right, this whole period of the previous bull run, we were above the 50 level, and then the bear market, we were capped underneath the 50 level here. Okay, and then again, the quote-unquote bull market of late. Don't know if any of us really feel that way about it, but anyway, this whole period here, we are above the 50 level apart from this deviation down here, okay, when everyone was doom and gloom. And now we're back here again at that 50 point, okay, so a very, very key level, something to be watching and keeping keen eyes on. Okay, I'm always talking about the mid-level, especially on the higher time frames, and how it's something that you should all be looking at, okay? weekly into demand here. Okay, so we have ETH into weekly demand, moving away. We have BTC into weekly demand and somewhat struggling at the moment to keep up. Okay, but both markets are into weekly demand. Typically, when ETH and BTC line up like this on the higher time frames, it's something to pay attention to, okay? Three-day picture is kind of akin, right? Kind of akin to BTC. Here, we may see the same thing, okay? The first peak of the divergence, potential divergence isn't quite as overextended, but we could see a flat bottom divergence occur around about the 30 mark here. Okay, so maybe something like this. Assuming, of course, BTC does the same and moves back into demand. Maybe we have the flat bottom divergence on the 3-day ETH, like so, which is still a very valid divergence, okay? So, I mean, really, this is kind of the higher time frame picture that I have my eyes on, okay? I'm not moving into long positions yet. I'm long gold at the moment. That's pretty much the only market I'm long, and obviously that's not in crypto. Short hype, was short Merl, closed that recently. I think that's it. Recently short HBAR as well. Okay, we can talk about those positions in a sec. Daily, nothing too interesting. I think the most important time frame recently on ETH has been the 2-hour and the 4-hour, really. Okay, and this is why. Right, when we're in this area here, I put out a tweet about these 4 stacked highs. Okay, 1, 2, 3, and 4 was here. Okay. So these are unswept naked highs. What that means is they haven't been taken out or swept, right? And make for very good sweep targets or SFP targets, whatever you want to call it, as they are in line with the higher time frame trend looking at this. So my tweet was saying 4 stacked highs here, completely unswept. It would be a shame if price took them out, okay? And when I say take them out, I mean either a sharp sweep, where we wick and close below, or a more sustained deviation like so, okay? Here you can see exactly what happened here. All right, price comes up, you go down to the 2-hour, it's even cleaner. So you can see we do technically have a 4-hour divergence here. I tend to call these the Batman divergences because they look like the Batman. And they tend to have quite good strike rates and quite good playouts. Again, sort of urging you to pay attention if you do trade divergences to the structure, right? You can use silly words like Batman divergence or spiky div or drawn out divergence or whatever, but ultimately these are visual patterns that you need to get used to. Right, it's not quite as simple as price just making higher highs and the oscillators making lower highs. It's the formation and shape in which they do so, right? And this is also why I urge people and students of mine to have a visual playbook as opposed to just a written playbook, because we're playing a pattern-based game here, guys. You know, this is a visual game. You need to memorize and have that sort of photographic memory. Memorizing the shape and structure of different things, divergences are case in point, okay? Over to the 2, very clean here, very clean. Lower high, lower high. and just about higher highs here on price. Okay, we always use candle bodies for divergence trading. And if you struggle to ascertain what's a body and what's a wick, where does it, land, where does the penny drop, etc., then just move over to line chart. Okay, it'll make things very easy for you. Okay, because the line just prints the bodies, not the wicks, as you can see here. So super clean, not a trade I took. Right, I had an old friend here, over from the UK. Haven't seen him in years. We were having a good few pints, and yeah, my eye wasn't on the market at the time, but a very clean trade as per the system we sort of teach and administer, nonetheless. If I remember though, I may be wrong here, but the deltas weren't particularly conducive to the short side either. Okay, there were kind of mixed signals on the delta side, or counter signals rather. Okay, so this is the divergence in here. And really, as we come up here and do that second spike, the first spike as well, really we want to see lots of these, right? Lots of these blue bars, indicating that market buying is happening into limit asks, and the stronger hand of the market is absorbing that buying pressure. And we didn't see that. In fact, we had the opposite with clusters of negative delta. Okay, so if we did have positive at the time, maybe I would have snuck away from the bar we were at and taken a trade on my phone. But I was aware that we didn't have any positive delta in this area, so I thought I'd leave it. I may not have taken the trade either way, even if I was, out of the house or not. I probably would have still skipped this. It would have been a toss-up. It would have been a difficult call to make, right? 4 stacked highs, very, very nice. Okay, when we have stacked highs, we know that they're more likely to be swept in reverse than single highs, right? Even double stacked highs is nice. We have 4 here. Okay, very clean diverging structure across the awesome oscillator and the RSI. As I said, we have that sort of Pac-Man divergence on the 4-hour as well. So lots of signals here, but I do typically want delta to line up when I'm trading ETH and BTC, and we didn't have that. Okay, so may not have taken the trade either way. Hype, we can take a look at. I am short hype at the moment. Okay, I'm currently short hype. A simple trade, a very, very simple trade. It's a breakdown trade. It's the same as a breakout trade. Okay, so this is my position here. And I've also exited my spot position at exactly the same time I took this short. Okay, I was holding spots. It was basically my entire portfolio, 95% of my portfolio, bar some private sales and some dust from the 19.4s. And you can see if you go back to months ago, right? We're talking like May here. If you go back to my live streams in May, I was talking fastidiously about hype. My eye was very keenly on hype. It was looking at this reclaim in here. Okay, and the reclaim of this level and the move up that I thought would lead to and catalyze a larger move to the upside on Hyperliquid. And we basically have the flip reverse here. Okay, so yes, I could have milked more out of the move here, but I wanted to take more of a zero or hero approach, because that's basically how I normally play spot cycles on alts, and it's served me well in the past. Didn't milk as much value as I could have, of course, so I was sort of biting instead of taking. Let's say I took this divergence confirmation candle here, 164%. We're now looking at 58. Okay, so not quite the same. But regardless, like I say, I was happy to hold this for longer with more conviction. But I felt sort of squeezed out and forced out of this market here. So I thought I'd unload my spot, but then also double down and short here, just because it looked super clean, right? It's a very, very clean level here. Okay, so you can see clean touch points, clean interactions. And yeah, ultimately my gut was just telling me to move out of hype. And this could not be the end of what we see here, right? I'm very much prepared for this to occur and for price to then come back up and reclaim this level. If so, so be it. Okay, I tried my hand, I followed my gut, followed my intuition, did what I thought was the responsible move in the markets. And ultimately, you know, what I would tell myself in that scenario is that still rode it up from 19s to 33s when pretty much, you know, 99% of every other altcoin I could have picked has still been bleeding down since then. So either way, a win is a win. Even if this scorches up, you know, locks in this daily divergence, perhaps reclaims the level, etc., then, you know, fine. I'll have to do some active, positive reframing about the situation, see it in a positive light, give myself a pat on the back, and not be too hard on myself, which is something we are all very guilty of. You know, it's the way our brains are wired. We always pull ourselves through the coals and out of the ashes, and you know, it's the way that our brains are wired, essentially. Okay, we focus on the negatives in order to eradicate them and do better in the future. But in this game, in the markets, investing or trading alike, we have to practice kindness and look at things in a positive light. Okay, it's something that I'm always working on. I'm always working on my mental state, my emotional state. I treat myself like a well-oiled machine in that regard, and I allocate a lot of time to trading psychology and to emotions, and I suggest you do the same. You know, there's an aphorism in the trading space. There's a lot of aphorisms in the trading space. A lot of them are complete bollocks. You know, you have to get the reps in on the lower time frames. Is something I very passionately disagree with. But one of the aphorisms that does ring true is that yeah, the higher time frames bear higher validity, and we can see here we're losing a key level. Okay, and yeah, I have to listen to those signals. Okay. We can just take a look at this condensed watch list. The condensed watch list is basically the markets that I deem still tradable, previously called the weekly strength watch list. It feels like after recent events, it doesn't really seem like the right label. So I've just called it condensed watch list because ultimately they are the strongest markets in the crypto alt sector. So if I'm going to take a long, it would be on these. Vice versa, they're the only markets I'd take a short on because they have any relative downside, whereas everything else in the full list is just down here. Okay, I didn't choose this market intentionally, I just clicked on the first one in my fuller watch list. I'm not taking short positions down here, right, in negative price discovery, right, like down here, losing this level. You should not be shorting these markets, in my opinion. Okay, like the meat of the move is here, right? This is the meat of the move. This is a trader's market. Okay, this is where you short and ride it all the way back down. You position trade this, you hold on, and you can see here that, you know, this isn't even over the largest time span because this is clearly a new ticker, but all the other coins as well. It's the same sort of thing, right? Looking at the weekly. It's the same thing, okay? It's just a fractal of what we're seeing here. All right, meat of the move here. This is where you short, position trade, reverse invest, whatever you want to call it, okay? This is a trader's market. You can play it back and forth if you so wish, okay? But only if you're trading relatively lower time frames and have the edge on those time frames. Down here, there's no desire to be shorting, and until we see more signs of life across the board, there's no desire to be longing either. I'm simply staying away from the majority of these markets, hence why I have this condensed list where there is some relative upside. You see it's a slightly different chart here on the weekly, right? Relative upside here because it's a strong market. You know, tapping into these highs, etc., but then also relative downside as well because, you know, we are still up fairly decently from the lows, and this can give us some short opportunity. So yeah, I mean, generally speaking, crypto is not the market to be trading right now. Okay, I've been dipping my toes into trad. So dipping my toes into trad, but because I'm new to traditional markets, I've been test trading, right? Which means I'm paper trading, not applying any capital, journaling my stats and seeing if my system is applicable over there as well. I just want to say that because even myself, after 9 years in the markets, moving over to new sectors and new things, whatever you're doing, right? If you're moving over to new areas that you're trading, if you're administering new systems, if you're testing out order flow for the first time, whatever it is, if you're doing something new, you should always be paper trading, right? Paper trade that system, paper trade that market for 6 months, do it for a year, okay? Have that patience. Don't start applying capital in areas that you're not familiar with. Okay, that's something that I really want to sort of urge you guys to remember, because even after nearly a decade in the markets, I'm still doing that myself. Okay. Some promising moves here. Okay, this was a trade I took on silver. Okay, very, very simple trade here. Right. So again, going back to that sort of, market structure defense zone, pockets of origin demand. We had the creation of the cluster, creation of the zone, move away, tap back in, start pushing up, okay? At this point, the point at which I took the position, we can see how healthy the daily RSI looks as well, okay? Reclaim the mid, coming down and retesting it. Again, a very, very simple trade, simple position. You can see how I'm trying to map out my system from crypto and, the areas and sectors in which I've cut my teeth. And just seeing if it's applicable over on trad. Okay, silver and gold have always been markets that have caught my eye as per my system, and I've got some equities here as well. And yeah, just paper trading at the moment. But as you can see, looking pretty decent at the moment. And again, just because I've got one win on paper doesn't mean I'm going to start applying capital and get gassed up. I'll still be doing this probably until summer 26. Okay. So yeah, just to note, there's nothing wrong and there's a lot right with paper trading, especially when you're trying something new in the markets. Merle, I was short from up here. So if you could refer back to a couple of streams ago, it was the one with Trader XO actually. I'd set some traps up here, scaled asks, okay, and I'd caught this sharp move here on the lower time frames, rode it back down to here, and on this retest exited 50% of the position. And I documented all of this in my Discord, okay? So I don't tend to sort of document my trades live on social media. It's not really what I'm into, and I only do it in the Discord as well if it offers any educational value, okay? But I documented this trade in the Discord, moved up here, caught the move by way of limit, which was a rare way of me to move into the markets. But considering the speed and sharpness and taking out the potential highs here, okay, this historic high and this local high, I was willing to do so based on the context of the market and the dynamics of price action at hand. But yeah, then when price came down and retested this low, I was happy to exit, move out of the position 50%, and then I moved out the rest 50% in this sort of area here around 36. Again, documented this trade fully in my Discord, and yeah, the reason I did so is because I do feel like it offers some educational value. The entry offers a lot of educational value, i.e. when I'm happy to bend my rules as per my execution, I'm always moving into the markets by limit chase, which is essentially just market order without the fees or slippage. A very handy function for you guys to get conversed with if you're not already. And then as price started moving up here, I just cut the rest. Well, first here on the SR retest, cut the rest here. And the reason being is because I had, very little directional conviction in the market. Okay, I don't want to roll the dice. I don't want to gamble. I'd rather lock in the 3R average or whatever it was and move on to the next. Okay. Appreciated it, Sal. Appreciate it, man. How do you feel about the shakedowns on crypto in the UK? Don't feel anything, wasn't even aware of them. I pay little to no attention to the news, veering towards the side of no attention to the news. I trade the charts, and that's what served me the best over the years. I used to listen to the news all the time, but the more I listen to the news, the more I would become subject to a great demon in trading, something I consider a great demon and a hindrance to progress, which is thought over fact. Thought over fact, as opposed to fact over thought. Okay. Now, I'm always leaning towards fact over thought, right? And fact for me is just simply the charts, right? The charts tell you everything you need to know, and the news and the narratives don't, okay? If I listen to the news, when I did listen to the news, I would, basically fall victim to the former and start spinning up all these webs of narratives, i.e., for instance, the shakedown on crypto in the UK is going to make that 3-day divergence happen. Okay, that is definitely going to happen. Actually, it's going to go further than that. It's not just going to 3-day diverge. It's going to come down and wipe out this low at the very least. Okay, so that's a dangerous thing to have in your head. Okay, the thoughts that you have and you sort of print onto the way that you trade is very, very dangerous, because let's say you're convinced that the UK news is going to plummet price and that you'll only entertain taking along after this high time frame low gets wiped out. Well, imagine if the 3-day div locks in, right? The charts are telling you something. The charts are telling you everything you need to know. You're getting a clean 3-day divergence, which is printing double confirmation across the awesome oscillator and the RSI. Clean diverging structure into weekly and 3-day origin demand. You get your trigger, you get a nice green candle with a long wick. It's a green pin bar on the higher time frames. You get some negative delta in there as well on BTC. Okay, so you get some negative delta, which is indicative of absorption. Everything you're needing to know, all the data points are given to you by the order flow on the charts. But instead, you don't take the trade because you're worried about the news and narratives, and you've got it baked into your mind that you're sure that this low will get wiped out. Okay, so just to illustrate an example there of why news can be so dangerous and so detrimental to your trading performance. To people who have watched my streams over and over again, I'm sorry for doing this, but I need to go back to the weekly awesome oscillator example that I always refer to when talking about this. Okay, so down here, one of the best moves I've made in crypto was allocating heavy spot into this awesome oscillator weekly divergence here. We also have somewhat of agreement on the RSI, although not too textbook. Was allocating spot into this candle here on the drop, and more so on this candle here on the potential confirmation, when the whole timeline on Twitter was just talking about, macro impending doom, World War III, black swans. We've just come off the back of FTX. Everything was looking so bleak. Sentiment was at an all-time low. News reports were coming out every day, battering crypto. And if you listen to any of that, then you would have just been completely shaken out of any spot allocation or long side exposure by way of fear. And often, guys, as well, the news is manipulated in order to make you feel like that, in order to make you sell your bags into the stronger hand, all of this sort of stuff. Call me a conspiracy theorist, fine. But, what I found over the years is just, looking at the charts and completely ignoring news. I haven't looked at my timeline in the longest time, where I've got a post only feed on Twitter, and maybe touch in once a month for 5 minutes, but just to entertain myself more than anything. Everything that I need to know is in the charts. And the more and more as a trader on my journey, I went into sort of blinders mode, where I was taking in less information, less opinions from others, less news. All of that was always net positive for my performance, always. So yeah, I urge you to do the same. Any other interesting markets we can take a look at? Sol just mucking around here, to be honest. Alert set down at the 95s. Not much else to really look at. Gold long. or synthetic gold rather. XRP, interesting on the 3-day here. Okay, so XRP and HBAR are two potential breakdown trades, right? Touched on this earlier. Here we have loss of 3-day support, perhaps, right? Perhaps. I'm not predicting this. I'm just saying it's something I have my eye on. Okay, so 3-day SR level here. If we do lose this and have a confirmed strong close underneath this level, then could take something like this, assuming the oscillators aren't hyper overextended. Take it down to the low, play into this gap here. And I mean, this is basically what the crypto space is offering in terms of swing trades at the moment, and really says everything for how ripe the trading conditions are, i.e. they're not at all, you know, currently in an HBAR short at the moment as of last night. And you can see here that even me just running it through this gap here and playing into this inefficiency it's not even a 2R trade. I mean, honestly, like, I was so back and forth about taking this position. The reasons not to, the pros for the trade were clean daily loss. Okay, so we've got a clean loss of a daily level here. If we invert it, you can treat it as just a regular breakout. Okay, regular breakout, consolidation prior to the break, which is what we want to see. RSI looking okay, not hyper overextended, which is fine. But then, you know, it's not even a 2R trade, right? Like, there's such little value at the moment. And, you know, if you're, like, for me, this is fine, okay? For me, this is fine. This is kind of like just about what I'm willing to do. I won't take anything which is, you know, less of an A-star setup than this. I'm not saying this is an A-star setup, but, you know, a setup with less boxes ticked. But I do worry for a lot of people out there. And if you're watching this and you've been over trading recently, please just take a break, because this is, you know, these are the positions that I'm moving into, and this is the best that I can sort of see at the moment. Okay, I'm sort of scratching an itch, hand on my heart, you know, I never really take 2R positions or less. But yeah, I mean, the shorts I've been looking at are HBAR on the daily, and then XRP here as well, potential 3-day loss. Okay, but you know, even this 2.5, HBAR 2 or under 1.9, you know, the risk to reward really isn't there at the moment on the higher time frames as a swing or position trader, which is what I am. If you're a lower time frame scalper, high frequency trader, or someone who has an edge on the lower time frames, and that's your gig, and we're talking about different things, but you know, in terms of the higher time frames and taking higher time frame moves and higher time frame trades, these are kind of the only things I'm looking at. Hype as well, obviously documented that and run through that position with you. This is a little bit more appetizing. Okay, looking at a 3.7R here. Okay, this makes a bit more sense to me. All right, which is why I both deloaded spot and then also went short on this market, because the R is just a bit higher. But yeah, at the moment the trading conditions are pretty shit, to be honest. So if you're not someone that's already happy, hand on your heart, with the levels of patience, stringency, and discipline that you exercise in your trading, treat this as, you know, something that you can just be moving into at the moment. Okay, so, you know, instead of looking to bank monetary wins, unfortunately, you know, the trading conditions at the moment aren't ripe for that, and you have to listen to that, right? Like, knowing when to operate and step back in trading, even for prolonged periods of time, is something which all pro traders know how to do. You know, you won't have an edge in every condition, right? And in some conditions you will have an edge, I won't have an edge. In some conditions neither of us will have an edge. You know, some conditions are just weak conditions to be operating in. And in one of my previous videos I talked about how you know, all the important stuff which actually makes you a successful trader, discipline, stringency, avoiding losses, knowing when to sit on your hands, etc., etc., these are all lagging metrics. Okay, and no, sorry, your equity curve is a lagging metric. These are the ones you should be focusing on. Okay, so if you work on these things first, your patience, your discipline, your stringency, then positive performance will come out of that, will be born out of that, right? This is the really important stuff which people seldom focus on, seldom speak about, seldom teach. But yeah, I hope you can take some value out of this stream and do so yourself. Right, I think we're going to wrap up there. Okay, I think we're going to wrap up. Do you guys have any more questions before we do? No? We all good? All right, well, I hope you guys all have a lovely weekend, and I'll catch you all again next Saturday, same time, 10:30 a.m. UK, if there's enough to talk about. If not, the following week. Okay? Anyway, take care, guys.